Hello, in this presentation we will be talking about the vendor section, the vendor cycle within QuickBooks Online. Here we are with the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be talking about the accounts payable or the vendors section, those items that would be involved in the cycle of accounts payable, including entering bills and paying bills. In order to do that, before looking at these areas within QuickBooks Online, we'll take a quick look at the QuickBooks Desktop version for a couple different reasons. One is it's going to have the home page gives a nice flowchart of the cycle of the activities and the order of that activity. And two, if you're used to the desktop version, we'll be able to look at those components and see the flowchart and then apply where those same items are found here in the online version. This is QuickBooks Desktop version. We're at the home page. So if you're used to the desktop version, you probably started out at least using this type of home page because it gives you a good flow, a really nice flow of how these different cycles will work in overviews of the cycle, including the vendor cycle or the accounts payable cycle, typically known as the customer cycle or sales cycle or receivable cycle, and then the employee cycle. And it really puts the components of what we're going to do into a nice flow chart. All of these areas are also on the online version. However, the format's going to be a little bit different, and I think it's good to kind of conversion over from this flowchart analysis and then see where those same components will be found in the online version. We're here focusing in on the vendor section. And the vendor section, typically vendors mean who we buy from. So when we say vendor, we mean like a store vendor who we are purchasing from. So we are the purchaser rather than the seller of the transactions when considering vendors, vendors then being those who we purchase from. The most simplified purchase will of course be just us paying for the goods that we receive, and that would just be us writing a check. The vendor section, however, typically is trying to see who we owe and list out those components of those people who we owe money to. In other words, we buy stuff or we get services on account and then have to track who we owe in an account like accounts payable. When that's the case, there's two main components to the vendor section, and that's going to be the enter bill and then the pay bill. So within this flowchart, it gives you a nice flow of what's going to happen. Obviously, we will enter the bill and then we will pay the bill. And when we enter the bill, it could be anything from the utility bill or supplies that we purchase, anything that we're going to put into the system. It's nice for us to be able to put it in the system even if we're not going to pay it at the point in time that we get the bill. Reason being is that that's usually closer to the point in time that we actually consume the work that was used, that we actually got the service that was gotten or purchased the item that was purchased, and therefore closer to the time that we should be recording it into the system. We shouldn't be waiting, in other words, to record those services or those expenses until we actually pay them. And two, it gives us all this information within the system and allows us to then see them in the pay bill section in a nice orderly way so that then we can pick and choose and sort which ones we want to pay when. And so that's the system that we're going to have. We're going to enter the bills here. You can think of the normal month-end bills that we're just going to list out. And then we're going to select this item, pay bills, which will actually pay the bills, but it'll also give us that opportunity to pick and choose which bills we want to pay and which not to pay. Now, the pay bills will, in essence, be just writing checks, but it'll allow us to write multiple checks at one time. That's really the whole vendor section. Then, that's the normal process of the vendor section. Now, if we are purchasing inventory, however, we have another component. If we are just a service company, that's really the whole story. If we're a company that has inventory, then we have a bit more complexity in the vendor section in that we may have purchase orders, which means that we're going to actually want to buy something, in our case, guitars. So we're going to ask the vendor for these guitars, and it's a little bit unusual of a form in that we don't actually have a journal entry related to it, unlike if we were to purchase something as an individual from an Amazon or something like that. We typically make payment before we receive the goods. Purchase order, the purchaser actually often has more power in a transaction on a business-to-business transaction, and therefore could actually request to be shipped the goods, in our case guitars, before we make a payment. So we can actually say, hey, we would just want these guitars. Once you give them to us, then we'll pay you. And so given that transaction, given that method, given the fact that the purchaser has that kind of power, then there's no actual journal entry with the purchase order. It's just requesting inventory. We haven't gotten the inventory and therefore will not record it. And we haven't made a payment and therefore will not be recording any payment. So that's going to be that. And then we have the receive inventory, typically often with a bill, at which point we'll record the fact that we received the inventory and enter the bill, and then we might pay the payment at a later time. Then, of course, we've got the sales tax information and some other type of options in here, but those are going to be the major components of the vendor section that we'll need to know how they flow through. Now, the flow here is really nice. This flow chart telling us exactly how we use these forms, because these forms then are what QuickBooks uses to drive transactions. QuickBooks is not going to drive most well, it is still driven by journal entries. So if you're from a journal entry background, every one of these forms except for the purchase order has a journal entry to it, and you really want to be able to say, well, what are the debits and credits related to it? And that'll give you an idea of how to put the financial statements together. We won't be talking about debits and credits most of the time in this course, except for like the adjusting process, but we will go back and forth to the financial statements and see the effect, see the two accounts affected, see the double entry accounting system working as we enter all these transactions. The driving components of these will be the forms. The forms are going to have to be set up properly in order for them to work properly, and we'll talk about how to set that up. In order to set that up, knowing debits and credits is helpful. Here's the QuickBooks Online setup, and we're going to go through some of these components a little bit different layout. We don't have the home page up front to go through that flow chart, so there's different areas where all those flows are at, however. Many of them are going to be up here in this little plus icon. So if we go to this plus icon and we go to the vendor section, we don't see a flow chart, but we see the same type of items that we're going to be using, same type of items that we saw in the home page. So typically the flow would then be that the normal flow would say that we're going to enter a bill. This would be like, you can think of these as the month-end bills, any bills that we have to pay, which we are not yet going to pay. We got a bill, but we're not going to pay it yet at this point in time. We'll enter the bill. And if we select that bill, it's going to be looking something like this. It'll have the bill. It looks kind of like a check input, but it's going to have a bill instead of a check. We'll start to analyze what these mean. In this case, you can think of the journal entry. You don't need to know debits and credits, but two accounts will be affected. The bill means all the time that the accounts payable is affected and going up. So we'd have the bill here, and then we'd have some account that will be the other side, possibly like a utility bill or a phone bill. So the accounts payable would go up and the expense in that case would go up. Or we'd be purchasing an item such as an inventory item, and that would mean that inventory would be at the other side. I'm going to close this back out. We're going to X out of this, and we're going to go back up top, and we're going to say usually we would enter the bills and then pay the bills. So pay the bills is really just writing a check. We would select the pay bills. Once all the bills have been entered, we can select them. If there was more than one, there'd be a bunch of bills in here. We could select more than one. Here we only have the one. And note that I'm using a populated worksheet here in terms of a QuickBooks file that already has some numbers in it. If you're new to this, if this is the first time we've opened up the QuickBooks file, you may not have a whole lot of information in there. That's okay. We're just going to basically take a look at this information and look through the different types of forms and get used to how to enter or where those components tie together. Then we'll go through the process of adding new information. So we would check this off, and the pay bill means we're going to pay it typically with a check. Checking account going down then would be the transaction. The other side being affected, the other side always being accounts payable. In this case, accounts payable related to Epiphone, this particular vendor. So the pay bills means that we're going to pay bill with usually a check, decreasing the checking account, and the other side paying down the payable that we owe after having entered the bill. And of course, this item here represents a bill that we had entered in the past and can now select for payment. We're going to close this back out. That's going to be the major cycle that we'll think of for a service company. If we have inventory, then we have a few more things we want to consider. Remember, we had the purchase order. So that typically means that we're going to request for inventory. In our case, it will be guitars that we're going to order, but no transaction is actually happening. So if we click on this, then this is going to be the purchase order. We'll select the vendor that we're going to purchase, in our case, a guitar from, and then we'll populate this information, and then in essence, we'll select the item, which in our case will be a guitar, and it'll give us the quantity, the rate, and the amount for that guitar. Although we have the amount, however, we're not paying that amount, and we haven't yet received the guitar, and therefore there's no transaction that will actually happen from this purchase order. It's only saying to the vendor, hey, we would like this. Once we have it, then we will record it in our system and enter the bill and eventually pay the bill for the inventory that has been received. We're going to close this back out and see what else we have. We select the drop down here. We're in the vendors section. So then we have the purchase order. Once we have the purchase order, we will receive the information, and typically we receive it and enter the bill after we get the information, or the guitar, in our case, the inventory, from the vendor. And then of course we have the check, which would mean that we're going to pay something. Now the check will typically mean that if we entered a bunch of bills, in other words, we typically would go to pay bills, which would generate checks, but multiple checks. If we wanted to just pay something straight right from one check, we would then just check the checks, and we wouldn't go through the pay bills. We wouldn't go to pay bill. We wouldn't go to entering the bill and then paying the bill. We would just simply pay the bill right there, then and there. So in that case, we can just go to the check. Acts like a check. We're going to enter the payee here, the vendor here, information, and then of course the account that will be affected if it was something like utility bill or whatnot, and or items if we were to purchase inventory items with the check down here. So we'll take a look at some of those in the future. Of course, the journal entry related to a check would be decreasing, typically the checking account, and the other side being for whatever we purchased, if that be some type of expense, utilities, telephone, and whatnot, expense account. If it be some type of inventory, in our case, guitars, it would be an inventory account. And we're going to close this back out. Those are going to be the major components that we will be using. If we select the drop down one more time, we also got some other items which will be an expense item. We'll take a look at that a few times as we work through the problem. I won't get into a lot of detail with this. We have the vendor credit, credit card credit, and then the print checks. We'll talk a little bit more about these in the future. I won't get into too much detail. The stuff we talked about right now is really what we want to know going through the vendor section. Note that when we do print checks, we still have to buy the checks and then have pre-printed checks, so that's a check number on it, and then print them. Or we can actually be doing some other checking system, writing the checks by hand, and then not print the checks. So we kind of have that option of just tracking the checks that we have within the QuickBooks system, or actually buying the checks and printing them through the QuickBooks system. If we do print the checks, it's not like we can print them just on a blank piece of paper, because we still need those pre-printed checks with the pre-numbered checks with them. So we're going to close this back out. Note that we also have this side panel over here, and if we're thinking about the payables side, we usually look at this expenses area. So this is another area that could give us more detailed information for certain components of the vendors section. So if we look at the expenses here and we have some transactions that have taken place, then it'll give us some information in terms of here's a bill, here's an expense, here's the check that we've been entered. So this will give us some activity that has happened in terms of a transaction type data, kind of like a general ledger type of data through here. So obviously this has some information that has already been populated. We've been working a little bit here so we can have some information that is populated and go through it like this. So that's going to be the expenses area here, and we'll work more with this as we enter data. Note you can also have some transactions from here. Most of them we already saw, but if you take a look at the transactions, the bill, the check, the expense, the check, the purchase order, and vendor credit can also be accessed here, as well as the print checks and pay bills items. So it just really depends on who you talk to as to whether their default area to go to is here or to go to expenses and then the expenses tab and get to a lot of that same information here. We can also go to specific accounts in this fashion as well. Then we have the vendors tab on the second tab here. This will give us a quick summary of our vendors, the people we owe money to. And again, this is populated because we already have information here. If it's a new file for you, you won't have any vendors in there. But this will give us some information about the vendors. It'll give us a quick open balance detail here, and it'll give us some options for the vendors in particular vendors. And these options will really just help us to populate a little bit. So if we were to create a purchase order, for example, for this particular vendor, then it would basically select the vendor as we create the purchase order. So it might save a little bit of time to pick that out there rather than creating the purchase order up here and then entering the vendor within the purchase order. One more thing we'll take a look at for this quick overview of the vendor type transactions, the purchasing cycle, would be the accounting down here. We're going to go to the accounting, and if we look at the chart of accounts tab, we can look at the typical account that will be related to purchasing, one being cash, but the other being accounts payable. And we'll scroll down through here. It's in order assets and then liabilities and equity, then income and expenses, and we're looking for the AP, which is right here. And this is another area where we can get to the register. So if we were to select the register, then we would see some information related to basically the accounts payable, which is part of the purchasing cycle. And that'll typically include entering the bills here and then the payment of the bills. So we got pay bills and enter bills, and we should see the cycle such as that when we look at the accounts payable. It should increase when we enter a bill and of course decrease when we pay the bill. So that's a quick overview of the vendor cycle. It's really helpful to look through these things by cycle to try to think through how the cycles work. One, because you'll be working in cycles. A lot of times if you're working in an accounting department, you're really oftentimes going to be working in accounts payable or accounts receivable or payroll. And two, there's a reason for that, in that these cycles are going to be more related to each other. So it's a lot easier to think through accounting processes rather than just by date of what's going to happen in terms of a complete chronological order, and more in terms of what's going to happen by date but within a cycle, such as the vendor cycle, the payable cycle, the purchasing cycle.